A very good morning, afternoon, or evening, depending on where you are. It is my pleasure to welcome you to the first Student Internet Governance Forum SIGF Conference. I'm Kavish Garg, and I will serve as the chairperson as well as the master of ceremonies for not just SIGF but this conference as well. Just for a quick introduction, I'm in 11th grade and I'm pursuing my 11th grade through Heritage International Experiential School, Gurgaon. I have published original research on certain government health policies, including the Ayushman Bharat scheme, and I've taken upon myself the mantle, of course, with the faith of the other students involved in SIGF, to create an initiative for us to discuss pertinent internet, digital, and technology policy issues. Before we move any further, let's just take a brief glimpse at the schedule. Um, After an introduction to SIGF, we'll begin with the first panel discussion on regulation for ethical AI at 10:20. Then we move on to our second panel discussion on technology with respect to cryptocurrencies and digital currencies. Then we take a short 5-minute intermission and reconvene for a discussion on privacy policy and data protection. And then we finish our lineup of discussions with a discussion on financial regulation for cryptocurrency. Lastly, we'll announce the winning special interest groups as well as the runner-up. And we hope that from wherever you are, you can join us to watch bright young students discuss pertinent internet, digital, and technology policy issues of today and the future. We're also proud to mention the fact that the first SIGF conference is held in affiliation with the India IGF, and which is further set up under the framework of the Tunis Agenda and UN-IGF. So, just to give you a brief primer on why SIGF was set up, our generation is currently in a unique position where we have spent our entire life immersed in the landscape of the internet which we know today. The modern landscape with social media, with concerns of privacy, with possibly increasing centralization of data and power, yet at the same time of movement for decentralization. Therefore, we believe that we are in a unique position to offer a perspective to the existing discussion on internet governance, and SIGF aims to harness that perspective from the youth and create something meaningful out of it. To accomplish this, we ensured through a democratic process that we created special interest groups which are composed of highly bright and talented students to put themselves forward on the stage and discuss these pertinent issues with us. Without further ado, I'll quickly introduce our team. We have 3 fellows with us. Mana Naval, who will lead the discussion on financial regulation for cryptocurrency. Sujit Bhattacharya, who will lead the discussion on regulation for ethical AI, as well as me. And I'll also serve as a fellow for one of the discussions. I'd also like to, yes, the Tunis Agenda is something which we modeled SIGF on, much like other internet governance forums. And within that, we aim to particularly base our organization on the first point, which is discuss public policy issues related to key elements of internet governance in order to foster the sustainability, robustness, security, stability, and development of the internet. Again, this is the generation which will enter possibly an unprecedented era of automation, a place where we as humans, as a polity, may not have direct control on what goes on the internet. And therefore, it is essential that our students, our generation, is the most engaged in these issues. We also aim to, in the future, build a framework where our generation can not only discuss the topics and the issues within us, but also have a system of bringing our concerns to the policymakers as well as other internet governance forums, and contribute to the discussion in that way. And with that, I'd also like to bring upon the importance of your your role as an audience in this event. Now, while the presenters themselves will be highly engaged with the topics, the ultimate aim of the conference is to have you, the audience, also be equally engaged in these topics. And for that, we request that you participate ardently and send in questions if you have any on the Facebook chat, which you'll find on the left or the right hand side of the video playing, depending on what device you are on. We'll be happy to take any questions you have if they allow for fruitful discussion, and we'll ensure the same are presented to the participants. Um, yes, we'll also have Dr. Bhattacharya, who is the president of the Center for Digital Economic Policy, presiding over as a judge, as well as Dr. Mrityunjay Sharma, who has pursued his PhD from the University of Manchester. We are very glad to have both of these eminent personalities with us today, and we hope that they can not only judge but also enrich our participants with their own acumen and knowledge they've accumulated over the years. So once again, heartfelt gratitude from SIGF for making the time here to be available for this conference. So before we go any further, we'll introduce the first SIG, Ethical Regulation for Ethical AI. The fellow for this SIG is Sajid Bhattacharya. He is in grade 9 studying at the Mothers International School and is interested in AI, hacking, maths, science. He's also won the Rookie All-Star Award in the Chicago Midwest Regional and has qualified in the World Championship of the FRC, which is a robotics competition. He's also won the special prize in the Empower Startup Contest. And without further ado, I'll hand over the floor to Sajid to moderate his discussion.
Thank you, Kavish. Good morning and welcome to my fellow panelists and delegates to the Student Internet Governance Forum. Today in this session, we are going to discuss an extremely important issue of ethical AI and more specifically, the need for regulations for ethical AI. So what is AI? AI stands for artificial intelligence, which is essentially using algorithms to train computers to behave intelligently. This does not mean that they become sentient. AI brings great power to anyone who wields it. As Uncle Ben said in Spider-Man, with great responsibility comes great power. However, we see AI being significantly misused, either by malified intentions or by accidents. As an example, Google's facial recognition system categorized an African American as a gorilla. This is clearly not acceptable. Today, we have Ishan Kela and Suhasini Bhattacharya to discuss whether we need regulations to enforce ethical AI. Ishan is in grade 10 and his interests are maths, programming, and entrepreneurship. He has been a student journalist for the Children's Post for a year and has a deep interest in ideas and their power to change the world. He has won the second spot in the two student entrepreneurship contest and reached the top 10 in another app. His app, Comedy Majors, has 37,000 downloads and has been downloaded in 100 countries around the world. Suhasini Bhattacharya is a student of class 12 studying at the Mothers International School and is interested in biology and medical sciences. She is also fascinated by the field of plastic surgery and its social effects like aiding acid attack victims. She spares time for singing and can sing in 4 languages, which are English, Hindi, French, and Bengali, and was also the finalist in the Empower Startup Contest. Now, I would like to ask both Ishan and Suhasini, do you think it is wise to have regulations for ensuring ethical AI?
Okay. So I think it's very important for us to have regulations for ethical AI, given that it's a self-learning program and the fact that poses a threat to humans as a whole due to our world being mostly connected on the cyberspace, and the AI can truly be a dangerous thing. So it should have regulations on it.
That's a great point. And Suhasini?
So I don't think now is the right time to have regulations on AI because AI is at a very premature stage in its development, and having regulations strictly enforced on it will hinder its development.
These are great points. So, Ishan, as per the example I gave, how do you ensure uniform international regulations for AI?
Okay, so first off, I would like to state that AI is a self-learning program that is extremely similar to humans. Its ability to learn from its mistakes and its actions are based off of human biases. Due to its human-like behavior, AI should have to follow the same moral code we do, laws. But laws between AI and humans, there's a key difference, and that's accountability. uh, in for humans are held solely responsible for their actions, while the blame for unethical AI falls on the programmer. I don't think that's right, since AI is a self-learning program and may not follow the intentions of its programmer. In AI cases, we should, instead of looking for who to blame and what punishment should give, we should find solutions to the problem. Depending on the severity, we should fix the program or delete it. This will help us learn from previous programs and make sure we don't repeat mistakes. And all regulations have to be based on standards globally accepted. First step would need to be a consensus on standards. For example, the three laws of robotics propounded by Isaac Asimov over the years have been edited on by multiple people, including the CEO of Microsoft, Satya Nadella, in 2016. And I think that the punishment for unethical AI should be non-monetary and severe enough to ensure compliance. I think it should be non-monetary, since the finding of tech giants for the last decade has not changed anything. The EU has been finding the tech giants for the last decade, but there has been no change in the tech giants' actions regarding AI. That's all I think.
Ishan, you make some amazing points. Moving on, Suhasini, please share your thoughts on when do you think is the right time to bring in regulations for AI?
So, firstly, as I said, now is not the right time as it's in a very premature stage. Bringing in regulations now would mean that only large tech companies like Google, Amazon, and Apple would be able to program AI systems. Small upcoming businesses will not be able to handle so many regulations, and this would limit new perspectives and ideas from forming and being programmed. If you look at the US regulation that banned access to stem cells from fetuses, it had a deadening impact on stem cell research in US and pushed it back in comparison to nations like China. So if this happens to Indian AI system, it would be hampered by regulations, and AI would be it would hinder creating new technologies at this nascent stage of technology. Also, since one of the main problems in ethical AI is a bias that is created, like you mentioned, the when two African Americans were identified as gorillas, this kind of a bias, though it's ethically wrong, it is important in certain it is important in certain programs, such as for example in a medical program, if there is a code written for to diagnose medical illnesses, which based on symptoms. It would need to be biased based on different ages, genders, and genome systems, because all of these are prone to different illnesses in variable degrees. For example, Indians are more prone to heart attacks and diabetes, and so catching early symptoms of these would be more beneficial as compared to you know, Caucasians. So the right time. So now, when the right time would be to the right time to put regulations would then be when it has reached a sufficient stage of maturity in terms of technology, and when the AI surpasses a certain stage and is headed towards superintelligence. Superintelligence is when AI surpasses human intelligence, which is obviously dangerous. And when in if and when AI systems reach that stage, before they reach that stage, only then should restrictions be put on it. But if it's put any time before that, it would just be um, hindering the programming. There should also be strict regulations in AI when it comes to any kind of military defense systems or nuclear weapon systems that are operated by AI to ensure safety. Having said that, if any regulations are brought into India and similar regulations are not there in the rest of the world, then India would be at a disadvantageous position with respect to the others in the Committee of Nations, and this is applied for any nation. Also, any programs concerning minors, like games like Talking Tom and Talking Angela and uh, so on and so forth, should have strict privacy regulations, as in these cases, information is being extracted from non consenting minors, and therefore, existing regulations on privacy, consumer protection, and data protection needs to be enhanced rather than creating specific regulations that chain up research in AI.
Wow, that was a great point as well. Thank you, Ishan and Suhasini, for participating in this discussion. You both have made some amazing points, and I have learned a lot from this conversation. Now, I will pass on the discussion to Kavish.
Hi, we have one question from the audience. Um, could the panelists please address this question?
Can I go first, if you don't mind?
Yeah, of course, of course.
So I think regulations are universal just as the law is, and I think that small players as well as big tech companies should be regulated regardless of their size, because the harm inflicted by AI may be less in terms of small players, but the harm is still there. And without regulation, small players, AI programs can be taken over by big players. Then there will be some gray area there.
And your thoughts, Suhasini?
So, as I mentioned, I think that putting regulations right now on both big tech companies and small players is not wise. That being said, if and when it is time to put regulations, they should be put both on big tech companies and small players. However, they differed and specified according to the needs and the purposes of both these companies and entities. So, like big tech companies would have some more advanced ethical needs as compared to small players, but they should be regulations on both of them nonetheless.
All right. I Those were amazing points as well. This was a very educating conversation, and Kavish, take the mic.
Sure. Um, all right. So we'll continue with our next discussion on the technology or special interest crypto technology with respect to cryptocurrencies and digital currencies. We have recently seen a surge in the utilization of not just cryptocurrencies but digital currencies as well, with the likes of China implementing a digital currency. In the past 10 years, from the infancy of cryptocurrency with Bitcoin, we have seen a meteoric rise to the point where cryptocurrencies are not just one of the largest asset classes in the world, but are also ones which have faced increasing scrutiny from our policymakers. One side of the spectrum argues that cryptocurrencies usher in a new era of decentralization, anonymity, and democratic control over our financial system, while another argues that it is an inefficient utilization of our energy resources, as well as a medium which enables or facilitates crime. Therefore, it is an increasingly important topic for discussion, and for that, we have two panelists right now. Um, Please give us 2 minutes to have our two panelists join us. We have our first panelist would be Twarit Khandelwal, who is a student from the Heritage International Experiential School, Gurgaon. He's currently pursuing his 11th grade. He is avidly interested in science and has in fact managed his own cryptocurrency portfolio. He's also networked with various founders or creators of cryptocurrency projects and coins, and therefore will provide us with great expertise for this topic. Our second panelist is Harsha Huja, also from the Heritage International Experiential School. He's also pursuing his 11th grade from there. He has organized and hosted various events exploring cryptocurrency inter-school and has educated students of our age on the same. We are glad to have you both join with us for this discussion.
So may we begin? All right, so I'll start off with my point for today. So our discussion is about cryptocurrency overall. However, I will be streamlining my discussion to primarily Bitcoin, proof of work, proof of stake, as well as the new concept node for RBI, i.e. the CBDC concept. So firstly, as a basic basis, Bitcoin was established in 2008 by some anonymous entity named Satoshi Nakamoto. It is said to have drawn from ideas from Hashcash and B-Money, wherein the former deals with the reduction of spam by imposing computational work upon the dispatchment of mails, as well as B-Money in this case, which intended to secure privacy and still allow exchange, which obviously is more comparable to Bitcoin. So these networks try to establish what is called decentralized or emergent consensus. And there are many mechanisms to allow this. I do not refer here to proof of work and proof of stake, but rather to unnamed systems. For example, in the case of Bitcoin, it involves full nodes verifying every transaction. Each of these nodes possessing a copy of the overall decentralized ledger, i.e. the blockchain with themselves, as well as each mining node generating what is called a proof of work. Now, a proof of work can be veritably thought of as the invisible hand of the crypto market, because mechanisms like proof of work allow the validation process to happen and therefore consensus to emerge. In the case of Bitcoin, one may validly suggest that someone can corrupt the blockchain by declaring a certain transaction or declaring a void exchange which does not concur with the incumbent ledger or any balance numbers currently existing. And for this reason, Bitcoin deals with such discrepancies by choosing whichever fork in the blockchain is the longest, and therefore demonstrates the greatest amount of computational power. For you to impose an invalid fork in the blockchain into the blockchain, of course, you would have to own 51% of the computational power of the entire network. I will discuss this further in the future. So it's also very well known that in terms of energy supply, proof of work is very, very energy intensive. And in fact, this disadvantage has been demonstrated in how the merge, which is a very, very recent and fresh event, in fact, reduced the emissions of Ethereum by 99.95% simply by shifting to a more coordinated consensus mechanism named proof of stake. So proof of stake usually generates consensus in different ways. Proof of stake usually tries to set the rate of minting Ethereum or in this, Ethereum is one very good example, at least, but there are other examples as well. In the case of Ethereum, at least, the timeline is divided into slots and epochs, where each slot is 12 seconds and each epoch is 32 slots. And for each of these 12-second slots, there is a committee chosen, a completely arbitrary committee of validators who have qualified as validators because they've paid 32 Ethereum to the network, which counts as their stake. And this is a minimum value for you to be eligible to validate. And therefore, a random committee of validators is chosen to attest to the proposition of a block to be added to the blockchain. There has to be a 2/3 majority for the complete attestation to support the annexation of the block to the blockchain. Now, there are some disadvantages with proof of stake, of course, as was observed or identified by a few people after the merge. Much of the stakes that were already set into Ethereum were stored within 2 or at max 3 exchanges. And this is an appalling level of centralization for something like a cryptocurrency. And it also makes all of these exchanges liable to government intervention and government policies, which we really can't predict for the moment, because at least in India, policies regarding it are very vague and a little powerless, if I'm honest. So another point about proof of work here is that proof of work actually connects cryptocurrency to the environment, because proof of work is highly energy intensive. The computational processes involved in proof of work require you to consistently draw power from the network, because it is effectively a trial and error computation. And for you to arrive at the right number is a very rare process, which is why competition is so high and absolutely blind in a network like proof of work. By connecting it to the environment, you also expose the value of the currency to natural disasters, to any environmental events of a sufficient enough scale that they completely reduce the validator strength of the mining network. This in turn actually does affect the difficulty of validation as well, because by reducing the amount of validators, the system tries to draw more validators in by trying to reduce the difficulty of mining. Now, since I've also already talked about proof of stake and the sort of consensus, the species of consensus that emerges from it, it can also be understood that proof of stake is much more coordinated and therefore much more efficient. One of the reasons why its consumption of electricity and consumption of power is generally much lower than proof of work. This coordination, however, and the staking is at the cost of higher odds of centralization. Why? Well, a single party can own sufficient enough nodes to completely overpower the validation process and the attestation process in every slot, or they can own enough stake to gain precedence over other stakers at the same time. This makes them liable to government intervention too, because their behavior and their movements on the network determine the value of the currency as well, how much the currency is perhaps trusted. This is a smaller possibility in a system like Bitcoin, at least the proof of work species employed in Bitcoin, because in the case of Bitcoin, at least, for you to launch a 51% attack or for you to own 51% of the entire network as a single party requires you to bear immense costs, as in inconceivably gargantuan costs, because mining is already a financially intensive process as well, which is why many miners reinvest their earnings back into their electricity fees generated by the process of mining. So government
Might I
intervention, yeah,
just I want to add a point here
yeah,
that especially right now, because Ethereum moved to proof of stake, everyone who is mining Ethereum has recently switched over to other currencies, and Bitcoin being a large part of it. And that is why the difficulty rate of Ethereum, of Bitcoin in terms of mining is the highest right now. It's reached an all-time high.
all right, yeah. So there's a question that has been asked: what are the disadvantages of Bitcoin versus CBDC? So, sir, I will be moving on to CBDC in a moment. Now, Bitcoin was one of the first examples of cryptocurrency. It is highly decentralized. We already know about the energy. We already know about the energy intensiveness. However, the problem with any cryptocurrency, of course, has been that illicit activities are usually very easy to facilitate, because anonymity is maintained on a network like this. CBDCs are very centralized. While they are digital currencies, what they provide for you is they provide a certain type of utility that does not presuppose decentralization. And the central bank still remains as the primary governing body and the primary observer of all the economic activity of the country. So they will be screening transactions like this. Perhaps that is the one advantage I can foresee at the moment. All right.
Twarit, can we have your inputs on the same?
In terms of CBDCs, yeah, I think in terms of Bitcoin, as Harsh said, a lot of it can't be traced back to people. However, in terms of CBDCs, criminal activity will be decreased, but again, it can be hacked, and it's essentially programmable money, and we'll add on to that in a while, but that's my view on it.
All right. So a question to both of you. We have recently seen blockchain technology not just being used for cryptocurrency, uh, as in the inherent basis of technology for cryptocurrency, not just being used for that purpose, but also for other purposes like voting, like NFTs. Do you believe that the cryptocurrency system can be utilized effectively for these purposes as well? And is it even healthy to have, for example, NFTs operate on the same blockchain as Ethereum and possibly consume resources?
I think okay, so NFTs has been largely misconceptualized nowadays because it's interpreted as just some sort of as bad art, if I can say so. And that isn't really the full potential of NFTs because there are multiple different NFTs, and I'll touch upon this, and they provide different utility. For example, some NFTs might provide a revenue share in a mining operation, or provide, or in the future, they can be used to show ownership for real world assets like housing and paintings. And in terms of Ethereum and NFTs are considered tokens. So if you go onto a ETH Explorer, they aren't showed as the JPEGs or anything, but they're identified as, I believe, ERC 721 tokens. And yeah, I don't think there's a competition in terms of utilization when compared to tokens and NFTs on the blockchain. They work in synergy.
All right. Harsh, would you have any inputs on the same?
Yes. So as far as the applications of a blockchain system are concerned, there has been a recent release of the national logistics policy as well, and there was one idea I had regarding this because one of the problems that it intended to solve was that there were a large number of intermediaries involved in the exchange of fees, at least in between truck drivers. And road travel is one of the most significant sources of interstate or interregion sourcing of goods. And for that reason, since the intermediary problem is one of the reasons why Bitcoin was started and why the blockchain was invented, it's very possible the network can be applied here as well. There are other very curious applications already existing of decentralization in general and not just Bitcoin. For example, what Twarit has a little more knowledge on as well, secure multi-party computation, where you basically split a single computation, you atomize a single computation and distribute it to multiple different people who can't possibly deduce what you were intending to do with the numbers that they provide you through their computation. So this sort of computation can actually be a benefit for CBDCs too, because at least with CBDCs, currently the network is very centralized, or at least it intends to be very centralized, even if it's a one-tier or two-tier model, or in general involving both the government and the private sector. Either ways, it will be very, very centralized. And it's quite plausible that the central bank won't be able to manage all the computation by itself. Whereas distributing computations like this to the entire country, to an entire country of willing validators or willing computers rather, would make everything more efficient and
Uh,
use the load. Yeah.
just to add upon the SMPC a part of Harsh's argument, SMPC provides a level of security that you can't find in normal encryption because it is information theoretic secure, which means even if a computer has infinite computing power and infinite time, it still won't be able to break through. So it'll essentially a large part of the community in cryptocurrencies have pointed out that if quantum computers come, they can just take over they can sort of hack the system for blockchains and launch 51% attacks easily. However, with information theoretic security, that won't be the case.
Right. Thank you for your inputs on the same. We have a
Uh,
question from the audience, which I'll display right now. The question is: do you recommend adoption of CBDC or adoption of cryptocurrencies that are not CBDC?
Uh, okay, so before I like straightforwardly answer that question, I do want to talk about the benefits, pros and cons of CBDCs. So I'll start with that. CBDCs, the government, if CBDCs are implemented, the government can freeze money at any time. Not that they will. They can put an expiry date on the money. It is hackable because of its centralization, and it restricts, and it's essentially programmable money. So it can restrict your spending. Say the government is in an economic slump, so they want people to spend money. They can put an expiry date on your money. You have to spend it by the next week, or even like they can say that if you're in a wartime effort or something, you can only spend your money for groceries or staples. And there's also no anonymity for the user, and I think that's very important. Whereas there are considerable pros like traceability will decrease criminal activity, and it can also lead to efficient payment systems, cross-border payments, and inter-corporation payments, and that'll be very fast. And it can provide alternative taxing structures. So, for example, instead of the government taxing outrageous amounts to single people, I think only 4% of the population in India pays taxes. But either way, it's a small number. And instead of that, they can instead impose a tax on the volume of transactions. So every transaction, they take 0.01% of the cut. And that will not hurt people as much as, say, 50% of their taxes because it will be applicable for the entire population. However, I do believe that the cons of CBDCs outweigh the pros, and therefore I prefer the adoption of cryptocurrencies because they can basically, their decentralization allows programmable money, but it also sort of mitigates the harmful effects of the same. Harsh, do you have anything to add?
Just one small point. So digital money schemes did exist even before Bitcoin was even in the mix, and these projects were seen to fail because they provided a similar centralization to what CBDCs do. They were managing transactions the same way as physical cash, which is also the intention of CBDCs, to make digital cash as similar to physical cash as possible. That's one of the points they mentioned in the concept note. So the reason why these projects collapsed in the past was that there was a single point of failure: centralization. Again, centralization was seen to be the cause of the downfall of such projects, and so that might be possible at this level as well, because if you aren't providing high levels of security as decentralization does for the sort of computations that the central bank provides, um, you're endangering a lot of money at the same time because you're exposing it to malicious activity online. Yeah. So
All right. We have another question. There have been certain algorithmic stablecoins, such as Terra Luna, which some experts suggest have been subject to particular attacks or targeted attacks. And this, in a way, highlights the fallibility of certain underlying technologies under certain cryptocurrencies. So, in a case such as the one with Terra Luna, with algorithmic stablecoins, do you believe is there any way to reinforce that underlying technology?
Okay, I'll talk about this. So I feel like a great part of what makes blockchain technology, at least right now, unique and has a lot of potential for growth is the experimentation. Look, algorithmic stable coins are in no way perfect, and they are large part play community sentiment plays a large part in them. But the fact that Terra Luna, with practically no underlying value, maintained its peg for so long is truly a feat. And I do think that they could have maintained it longer and been successful if if the company took more better decisions. For example, a big part of it was Terra Luna had this. I don't remember the software's name, but it basically allowed people to stake their USD and guaranteed stable returns of around 7% or 9% per annum. And for this unstaking and staking, there was no lock period, so they could unstake and stake whenever they wanted. So as soon as Terra Luna slightly dipped in value, people started to panic, unstake and sell their Luna and sell their USD, and that caused a massive uh, downfall in price, and then the cycle just continued. There were other factors at play, but this was a big part of it. And if for example, these stakes were locked, then the company would have had a delayed time or more time to react to this, and they could have been successful in mitigating a lot of the consequences. But I don't think, because essentially there are other type of stable coins, for example, USDT or USDC, which have actual real world assets backing each token. And in that sense, I don't think sort of strengthening the foundation of the blockchain would do anything, because in the end, it's how the Terra company programmed the cryptocurrency.
All right. I see. So, thank you for your valuable inputs. We have one more question. Um, I just displayed on the chat. The question here is that, do you think it is deception to peg a currency without having asset backing? So it's a general question, not just for cryptocurrencies, but uh, please refer to the discussion you've made thus far.
Harsh, do you have any inputs for this?
Not quite. My exploration of Terra Luna is quite limited because I've only exposed the computational aspect of it so far. So, Parit, I think you'd be better suited.
Yeah. Okay, so Terra Luna isn't the only currency which has sort of a peg to a certain value. I think there's a lot of there's this software called there's this project called Tomb, and Tomb forks have been popularized in DeFi, and what they have is a plethora of tokens, I think around three or four, and each token works in synergy to maintain one token's peg. And so when the token falls below peg, people are encouraged to buy, and when it falls above peg, people are encouraged to sell. And in terms of this question specifically, I think currently blockchain and decentralized finance is a big experiment, and I don't have the moral or ethical uh, thoughts to know if this it's a deception. Personally, I think if they can maintain a peg, I don't mind it. And Terra Luna did have certain assets. They had a certain backing, and they used that backing to buy back Terra to maintain its peg again, but that wasn't successful. So yeah, I feel as the scale grows, it might people have to be aware of the risks. And I feel like Terra Luna sort of misrepresented while they were marketing, and that is this, and I don't think that's right. But as far as maintaining a peg, I don't think that has a problem per se. It's a clear model.
Right. So thank you for thank you for your enriching outputs, not just to the audience questions, but your the ones we asked as well. Um, Thank you. So we'll now take a short 5-minute intermission and then resume with Special Interest Group 3, Privacy Policy and Data Protection. We'll reconvene at 10:57 a.m. IST. Thank you. Right. Welcome back. I hope you had a refreshing break. As on schedule, we'll convene with the third SIG, privacy policy and data protection. Now, privacy policy has emerged as a field which has become increasingly pertinent as a result of the propagation of social media platforms, which some say pose a risk to not just our personal information, but everything from our behavioral patterns to how we react to simple images. Many say that all of this information has been compiled and is being utilized actively against us for the purposes of advertisement and psychological political manipulation. Um, Therefore, it has grown to be one of the most important topics being discussed today in the space of internet policy. And we'll have two panelists with us, Anirudh and Arif, both from DPS Rohini, who have extensive experience in MUNs and debating similar issues in the past. They'll enlighten us with their perspective on privacy policy and data protection. So, my first question to you is, where should one draw the line between privacy and security?
Okay, so to answer this question, first we must go into the depth of what is privacy and security. Privacy means that a user's intimate information remains confidential and that he has total control over how it is handled. However, security means that a person is prevented from gaining unauthorized access to information and or misusing that information. Okay, so now let's take an example of a very popular case, Apple versus FBI 2016. Where the FBI, the US Federal Bureau of Investigation, asked for backdoor entry of a shooter's iPhone 5C who was responsible for killing 14 people in San Francisco. In other words, App- Apple had to create a software that was like a master key and could open hundreds of millions of other iPhones, hacking its own security system. This meant that the tech giant had to overhaul the system that disables the phone after 10 unsuccessful password attempts. Once this feature kicks in, all the data on the phone is inaccessible. Apple declined to help the FBI. Now, we could have two contrasting views on this. The first set of people would be in favor of maintaining the privacy of the individual, as new software or the master key could create backdoor entries to other millions of iPhones and disrupt the lives and privacy of many people. Even Tim Cook argued that if the FBI could access this iPhone, nothing would stop them from doing it to many others. It would also set a very dangerous precedent. On the contrary, an argument could be made that in this case, security trumps privacy and that Farouk's, who was the shooter, phone must be hacked in order to bring the lives of 14 people to justice, and that it would force tech companies to cooperate with law authorities even in the future. We would like to conclude by saying that privacy and security go hand in hand, and the line must be drawn between them when the data is extremely confidential, and line must be kept private to safeguard a person's dignity and empowerment. For example, tracking the location of a person, being able to see his medical requirements and records, and any other detail that the user thinks are too personal to share.
Thank you for that. Anirudh, would you have any inputs on the same?
Just my inputs are we're on the same page on that the privacy and security go hand in hand, and the line must be drawn between them, as there should always be a line between privacy and security for the betterment of the society. And when the data is extremely confidential, it must be kept private to safeguard the people's dignity and empowerment. That's my point.
Right. I see. So I'll move on to my second question, which just not only pertains to privacy policy, but also to a part of the Tunis agenda. It is the everlasting problem of having a world where information is decentralized, i.e., stored in servers across the world. How can differences in perspectives on privacy policy and data protection be reconciled to create a universal framework for the same, if at all? So I now yield the floor to you to provide your inputs.
Yes, I'll be answering the question and providing my inputs. So, as you said, creating a universal framework concerning differences in perception of privacy and policy and data protection does seem difficult, but it's not an impossible task. Data privacy defines who has access to data, while data protection provides tools and policies to actually restrict access to the data. Compliance regulations help ensure that users' privacy requests are carried out by companies, and companies are responsible to take measures to protect private user data. Data protection and privacy is typically applied to personal health information, which is PHI, personal identifiable information (PWI), and it plays an important, a vital role in business operations, development, and finances. By protecting data, companies can prevent data breaches, damage reputation, and can better meet regulatory requirements. So, data protection solutions rely on technologies such as data loss prevention, which is DLP, storage with built-in data functions, firewalls, encryption, and endpoint protection, which provide feasible solutions to the above mentioned problem. And another solution is that could be the creation of an engine or tool using machine learning that automatically identifies how intimate the information is for the individual and decides whether to share it with the agencies or not. Selective tracking is another way progressing towards making a universal framework on the reconciliation of privacy, policy, and data protection. Thank you.
All right. Thank you for that. Arav, would you have any inputs?
I think what he said was totally on point, and I don't think I can add anything else to that.
All right. That's interesting to hear. So another question we would have is that, in light of the Supreme Court of India unanimously agreeing that, unanimously recognizing privacy as a fundamental right guaranteed by the Constitution on August 24th, 2017, do you believe that India has made progress on the privacy frontier from then on, since the 5 years which have elapsed from that decision? If so, in what ways has it done the same?
Okay, so I'll be taking that on. Um, right to privacy, it is a bundle of rights. It's a generic term encompassing various rights recognized to be inherent in concept of ordered liberty, and such rights prevent government interference in intimate personal relationships or activities. freedom of individual to make fundamental choices involving himself, his family, and his relationship with others. In a landmark decision, India's Supreme Court acknowledged that Indians have a right to privacy. It will take years to properly understand the decision's implications, although after 5 years, as you said, it is clear that substantial progress has been made on the privacy frontier. These changes affect the government of India's efforts at maintaining a centralized database of personal information known as Aadhaar. They also affect the operation of global platforms such as Facebook, Instagram, WhatsApp, and Google in India. It calls many practices from the ubiquitous use of CCTV to unnecessary intrusive questions in job and university applications into the question. It also casts doubt on previous Indian Supreme Court decisions like its infamous rejection of a plea to decriminalize homosexuality. Another way in which this judgment has proven to be progressive is that it has declared the right to privacy, which is available against private parties. This means that global web-based platforms and other companies that process information in India will have to watch policy developments in India carefully, given that the Indian government is now required to ensure they uphold citizens' right to privacy. Thus, personal data collection and surveillance practices in India have changed for the better as a result of the landmark case. Thank you.
All right. Ara, would you have any inputs on the same?
Not really. Like Anirudh covered all the points, so even I wanted to say one or two things, but I think it's included, so I'm fine. Thanks.
So we have one question from the audience. Should India have the same interpretation of privacy as the Western world, or does India need to have its own interpretation of privacy?
Okay, so I'll take that on. No, in fact, the word authority taken on. So, India, as you all know, India is it has many different aspects from the rest of the world, from the rest of the Western world, which privacy for them it is very different to what privacy is for us. For India, privacy is for example, messaging for India, privacy it means different thing. For example, we have different ideologies. For example, Aadhaar card and CCTV, as both of these provide a different aspect to the privacy and data protection field. For the Western world, there is no such thing as Aadhaar, and there's different citizenship records. So India, in fact, will need its own interpretation of privacy, uh, as it has different economically viable options.
I see. Thank you for your inputs on the question. Ara, would you have inputs on the same?
Yeah, I do have some inputs. Like I would like to add that the European, the western part of the nation of the world, and India could have different interpretations on what privacy and security is. For example, actually, you know what? That's fine because I only wanted to add that, so I'm done. Thank you so
All
much.
right. We have another question from the audience. If the government cannot link people through Aadhaar, how can benefits, for example, how can benefits be delivered to the poor?
Ira, would you like to take that up?
I'm still I'm still thinking about some valuable points, so I need a minute, please.
Sure, take your time. All right, so we'll come back to that question at the end of the discussion. Um, so beyond the questions we have already asked, would you have any other inputs on legislation in India on the privacy frontier or anywhere else in the world for that matter?
Do you want me to answer the question you asked regarding the benefits delivered to the poor?
Sure.
Right. So, poor people in developing countries, they are concerned about their families are safe, sheltered, and are adequately nourished, as you all know. But where the privacy point, where does it fit into that mix? So, in many parts of the world, by constitution, state, or treaty, privacy is considered as a human right. Accordingly, regardless of whether someone is rich or poor, their privacy must be protected. In addition to human rights concerns, however, there are a lot of pragmatic reasons why privacy of all people should be respected, including that of poor people. So I'll be listing the reasons. The first is identity theft. It is a vexing problem. Victims of identity theft spend time and money trying to reclaim their good name and account status, if even possible, after a criminal steals funds or incurs debt in their name. Scam artists also use stolen personal information to take advantage of consumers by taking them into purchases and investments that don't exist or are worthless. Financial institutions reporting erroneous information to credit bureaus can result in denials of loans, insurance, and even employment opportunities, which is, of course, not beneficial and, in fact, even serves as a disadvantage to poor people, as many poor people in India are concentrated in the rural area. So this is especially true when the individual who is the subject of the reporting either did not know the negative information was in his or her file and could not effectively dispute it. Some actions that violate privacy could also harm customer reputations. Some digital lenders, for example, have adopted the approach of shaming delinquent borrowers into paying delinquent amounts by disclosing their past due obligations on social media. Not only is this practice highly coercive, it could also compel customers to make payments they don't owe. So when it comes to poor customers specifically, a lack of privacy could harm broader financial inclusion efforts. In India, taking digital credit, for example, to assess credit worthiness, digital lenders typically use data on mobile phone usage, such as how many SMS messages were sent per month, how often a SIM card is loaded, social media activity, and even whether phone batteries are charged only when they're used close to empty, as this could reflect on the ability to pay for electricity services. At least one lender even seeks access to the contents of SMS messages to make these determinations. So, if poor people feel that their privacy is being violated, that the personal information may be used in ways they are not comfortable with, then they are protected by the fundamental right to privacy. So it benefits the poor people on a very large scale. And with that, I would like to conclude my point. Thank you.
All right. Thank you for your inputs. So thank you especially Anirudh and Arav for coming here and presenting your views on privacy policy and data protection. I'd also like to thank Darshan Shah, the fellow originally responsible for this SIG. He unfortunately could not be here due to some uh, unfortunate circumstances. So anyways, I'll give an obligatory introduction to him. He's a 12th grade student currently studying in Karnataka. He's also avidly interested in privacy policy and has, in fact, done projects and written papers on the Personal Data Protection Bill, as well as other legislation across the world. Um, thank you, Anirudh and Arav, for your inputs. We're glad to see you here. Thank you. We'll take a short 5-minute break and reconvene at 11:20 a.m. Thank you. All right. It is my pleasure to welcome you back to the proceedings of the first Student Internet Governance Forum SIGF Conference. Um, as stated earlier, we begin with our fourth SIG, which is financial regulations on cryptocurrency. While we've already had discussion on cryptocurrency before, this SIG is particularly tailored towards real-life applications as well as regulation on the financial side. Um, so I'd now like to give the floor to Manan Abad, who's the fellow responsible for this SIT. He is a student studying in 11th grade in the Sri Ram School Aravalli. He's strongly interested in technology, sports, and data analytics, as well as the intersections between the same. Um, he is passionate about computer science and how it impacts the current world, and the major application of that, of course, is cryptocurrency. Manan is also currently working on a machine learning based program. So I'll now give the floor to Manan.
Um, so we have four participants today. We're going to be talking about the financial regulation of cryptocurrencies. I'll just introduce them. We have Arnav Pandey, who's a student studying in grade 12 in the Delhi Public School, Mathura Road. We have Manacha, who's a grade 11 student studying at Scottish High International School. He likes theatre, public speaking, business management, and also enjoys playing football. We have Mishti Goyal, another 11th grade student studying at DPS International Saket. And last but not the least, we have Pratham Tulsian, another grade 11 student studying at Gyanda Academy, Nepal. So we're going to start off with the questions that we're going to discuss today. The first question is, do you think that there is utility in cryptocurrency for the normal consumer? Anyone, please feel free to unmute and talk.
So, may I start?
Yeah.
Okay. So, first of all, cryptocurrency is an idea that gives ownership to the individual for its property. Sorry. Taking example, if a person has rupees 1,000 in his hand, he may feel rich, but he doesn't have full authority of his money in his hand because government can anytime demonetize his money, demonetize the currency, and the money will just be a piece of paper. So the cryptocurrency gives ownership to our wealth, and and so the utility of cryptocurrency increase should be given to the normal person because it gives full power of their property to it.
Um, I'll like to say something. So first of all, what is cryptocurrency? We're talking about cryptocurrency, and like we haven't spoken about what it is. So we can say that it's a virtual or digital currency that works on blockchain technology, which is based, um, and it is again like it's the usage of the currency is same. It's designed to buy and exchange goods and services. Just that when you're talking about cryptocurrency, there's no involvement of a third party. The government. Hello.
Yes, we
Uh,
can hear you. Go ahead.
okay, I was speaking all along, but I think you couldn't hear me. I'll start again. So first of all, what is cryptocurrency? So cryptocurrency is a virtual or digital currency that can be that is basic that basically works on blockchain technology. It's again designed to exchange goods and services and make payments, which basically the difference in cryptocurrency is that there's no third party involvement. The government is not involved in like the transaction of cryptocurrency. Now I'd like to elaborate more upon how and like the question, the utility, how it's beneficial for a consumer to use it. Now when you're borrowing from other places, you usually have to pay a very high rate of interest, but with cryptocurrency there's no transaction costs, so or very low transaction costs for that matter. You can make your transactions at any time of the day. um, there's no limit to making transactions. Even when you're making international transactions for that matter, there's very low cost to it. There is no delay, and most of all, when you're making other types of investments or transactions, you have to do a lot of paperwork. With cryptocurrency, you just have to make an account, and you can work through it by learning how the app works. However, I'd also like to say that there are few risks that one should take in account when using cryptocurrency. For example, cryptocurrency is much more volatile than other currencies like bonds or shares and stuff. The market can go up and double in the matter of minutes, but at the same time, the market can crash at the same in the matter of minutes as well. Uh, and then there is a lot of scamming. That a lot they're basically multiple types multiple sorry they're basically hackers in a large amount that are active on cryptocurrency websites at this point of time because of the growth of cryptocurrency. We all know that Bitcoin, one of the most popular cryptocurrencies, has grown by 300% just in the last year, and Ethereum, for that matter, has also grown by 2000%. Uh, so we have to be aware of hackers, and we have to adopt adopt some rules so that we don't get caught into fraud. Then third, a lot of we have to be sure to pay our taxes. So a lot of investors earn huge amount of profits, and then taxes are not paid by them. So IRS is taking this account very seriously. So taxes need to be paid on time and in the right amount. That's all I like.
Okay. Would anyone else
So-
like to talk about the question?
Yeah, I'd like to add on something to that. So, there's no doubt on crypto that it's volatile, basically. But I think to answer this question, first, we need to draw a clear line between a consumer of crypto and an investor in crypto. So, an investor would basically invest large amounts of money in crypto hoping for a return, whereas a consumer would use it for its daily activities. This is where the major advantage of crypto comes in. So, remittance with crypto is remittance in flat money takes a lot of time. Every bank you go to has service fees, internet banking fees, and it takes a lot of time to transfer money from one account to another. Whereas if you embrace crypto truly as a consumer and then try to use it for your daily goods, it will almost in all areas provide an overall edge for you. There's no extra charge. You can transfer almost any amount of money. You can transfer internationally, and most of all, it's almost instant. The biggest competitor to crypto in India, I would say, is UPI, because it's basically achieves the same thing, like no fees, fast transfers. But UPI is still kind of a new technology, and it does have many errors in its ways. Money gets lost due to glitches, internet connection problems, and the biggest problem is you have limits on certain apps. So crypto eliminates all of that and provides a seamless way to transfer money between continents. And that's why I think crypto is really valuable to the average consumer if they truly embrace it.
I mean, I totally agree with that point, but I'm saying that somebody who's using it as a daily consumer might also get into investing in it because of how much benefit or how much profit gain they see in it. So that could come something as like using crypto on a daily basis for them.
Yes, that's a great advantage as well. So the
Yes.
entry barrier from becoming a consumer to an investor is lower in crypto compared to other markets like the stock market and housing market, stuff like that. To gain a noticeable profit in the stock market, you have to invest upwards of 40,000 rupees. Whereas in
Right.
crypto, since it's so volatile, you can use its volatility to your advantage. And then you
Right.
could invest any amount of money and hope for a return, provided you do your research on the coin and kind of crypto you're investing in.
Got it. Yes. I totally agree with that.
Perfect. Does anyone else want to talk about this? If not, we'll be moving on to the second question, which is can normal currency and cryptocurrency coexist in an economic system? And why or why not?
Should I go to the
So,
beginning?
Yes.
yeah, you can.
Okay, you can speak.
Okay.
So, normal currency and cryptocurrency can definitely exist in an ecosystem together, but this is where financial regulation of crypto comes in. If you financially regulate crypto, first of all, it's really hard to do that since it's present simultaneously in a lot of places. It's not under any one organization, thus, it's really hard to regulate it and actually put laws on it. Because of this, it's arduous for one authority to impose its laws automatically on all the crypto reserves. Additionally, it implies that a workplace cannot theoretically be raided by the government that is investing in crypto, because the government has no control over their investments. Regulation may provide a gateway to the Indian government to gain unprecedented amount on the crypto market, which would cause the regular consumers, not the investors, the consumers of crypto, to get hit with a loss because of drop in the market. With the current state of crypto, I can certainly see the two coexisting in harmony and even benefiting each other. But if strict regulations are imposed on crypto, it may cause crypto to become obsolete, since it would sort of become centralized, when the whole point of the crypto is to be decentralized and not under any one authority.
I also agree that they can coexist in the same market. I think there needs to be development of technology that should happen. We've seen that cryptocurrencies are already coexisting in many countries, be it big or small. So, because of their characteristics, if there is the right kind of technology, they could coexist.
All right. Is there any other viewpoint on this question?
Yeah, I think hybrid of the cryptocurrencies and the fiat currency would be great, because then the government could actually recognize both of the currencies and have both options for consumers and businesses to choose from, and plus the government can collect tax revenues and fund their uh, daily activities and all that. So that would be great if they could coexist, in my opinion.
Okay. We move on to our last question today. How can protection against fraud be implemented in cryptocurrency and the NFT space?
I'd like to start. I think when we're talking about cryptocurrency, there every user has something called a private key. So now, if your private key is stolen, you completely lose access of your cryptocurrency account and all of your transactions, all of your money that is in the cryptocurrency. So one of the main thing people in using cryptocurrency need to take an account is that their private key is very safe. It is in no form stolen. Um, then they must keep large. Somebody who's like keeping large amount of cryptocurrency should always keep it in cold wallets, which is offline, because offline nobody's able to basically. It's very difficult to hack into your account. Then there's a lot of impersonation of frauds that are happening. So brands are being impersonated. So that also needs to be considered, that you are in no formal way being impersonated.
Okay. Is there anyone
I'd like
else?
to add on something to this. Yes. So, before I answer this question, I think I should start with an analogy. When I was around 5 or 6 years old, I wanted to learn how to swim, and my nearest swimming pool actually got closed down because of a drowning incident. I think this perfectly fits into today's crypto market, because a drowning incident is a fraud or a scam taking place in the crypto market. If a drowning incident happens at a swimming pool, the first reaction of the community is to shut down the swimming pool, and they impose that it's the swimming pool's fault that the person drowned. Instead, what we should be doing is maybe appointing more lifeguards, having stricter rules, having CCTV cameras, so we ensure that people are safe at that swimming pool. The swimming pool here is the crypto market. If a Bitcoin fraud does take place, our first reaction is to blame it on Bitcoin. We drive its price into the ground. We launch publicity campaigns against it, and there is overall a lot of stigma around a cryptocurrency that leads to some scams. Instead, what we could be doing is imposing stricter laws. And I want you to know that laws does not equate to regulations here. Stricter laws could mean stricter laws basically that we make sure to persecute the people who are doing fraud, and uh, ensure that maybe all the crypto marketplaces which are privately owned have their own admins and surveillance over what's going on in the daily trading of crypto. And when we come to NFTs, this is where the NFT market has a major edge over crypto. OpenSea, Binance, and some other NFT marketplaces are all privately owned. This means the company has complete control over every single thing happening in the NFT marketplace. This means that some frauds in the NFT marketplace, like imitation or price driving. So, imitation basically here means that someone is imitating another famous NFT. One of the most, I think, renowned NFTs right now, and one of the most expensive ones, is the Bored Apes collection. And as soon as you go on OpenSea and search Bored Apes, there's like 5 different NFT collections with just one word changed in the title, and that could mislead a lot of people into thinking that this is another branch of Bored Apes, but that's not true at all. Since Bored Apes has been around for a year or two, it's relatively stable in the NFT market, whereas these new ones are not stable at all, and it may cause fraud and loss of NFT consumer. Um, I would also like to add that storing Bitcoin offline in a hard drive or uh, on a computer may be safe from online attacks, but that also makes it prone to natural calamity or theft. So in order to secure crypto correctly, I think the correct step would be, first of all, to secure your 12-word key. Almost all crypto wallets come with a 12-word combination of random words that is
Yes,
not shared by
private
anyone,
key.
and it's a complete override master key to your entire wallet. If your wallet gets hacked and like the hacker denies your entry, you can 100% use that 12-word key to get access, transfer all your crypto, or kick the hacker out. But this 12-word key is not totally secure, as Mishri said before. There have been incidences of people hacking literal databases of these keys, millions of keys getting hacked just because of a team of hackers. So I think what we should do is store the key offline instead of storing the actual cryptocurrency offline. Like we store gold in vaults, back vaults. We could store keys there, and we could ensure that keys are not kept in an online database anywhere, so that even if a Bitcoin reserve is targeted by hackers, we can make sure they only get into the wallets and not the actual keys, because the keys could definitely provide an override and a solution to the fraud in the crypto market right now.
Okay, I'd like to say I completely agree with what you're saying again, but users themselves should take some cautions before they're being regulated. If obviously the companies should regulate, again, not with the government involved, but users themselves could take some actions to prevent their loss of money or their loss of the currency.
If you do research on like how the project, what the project is about, the NFT project, for example, what's it about, where's it coming from, what's its like actual value and all that. You should take into account that before buying any NFT.
Okay.
Okay. Is there anything else anyone has to say about this question?
Yes. So the user must also prevent oneself from getting phishing attacks. So basically, phishing attack is something which hackers do. So they send unwanted links to people's, and they enter their datas into the in the link they provide, and the hackers have all the power to access their private details. So the investors investing into uh, cryptocurrency must investors investing into cryptocurrency must be safe before clicking into any link, and must not give their details in untrusted sites and apps.
Okay. Thank you for talking about all these questions. We had some very valid inputs. We now be moving on to the audience questions. The first question is, what is gas price in crypto? Any one of you can talk about this, feel free.
To offer further clarification, a gas fee or a gas price is the fee charged by the blockchain network for processing the transaction as an incentive for making said transaction. So effectively, the question is asking if uh, the gas price or the gas fee in crypto sort of overshadows any of the benefits it has. So it isn't necessarily uh, a transactionless or a transaction fee less medium of exchange. So
I'm not sure if I understand your question, but from whatever I do understand, like I mentioned before, there's very low or no transaction costs in crypto.
Also, gas fees are
International
prominent in some crypto.
Sorry.
I'm sorry, what?
No, you can continue.
Gas fees are prominent in most crypto coins, but when we're talking about NFTs and NFTs that are related to crypto, such as Ethereum, a gas price is only applicable in certain states. For example, if you need to make a large amount of NFTs and then upload them to the actual blockchain, you would need to pay a gas fee for each NFT so that it's basically like a fee for blockchain maintenance and to make sure that your NFT stays decentralized. But that's not necessary in some coins. And some coins do actually don't take gas fees at all, and which actually furthers my previous point of the difference between sending money through banks and then sending money through crypto.
Okay, we have another question, which is limits on UPI as a policy decision by government to protect individuals. Would it really help if there is no oversight on crypto and therefore there's no protection for people using crypto?
So I'd like to start by saying that, as I said before, UPI is the biggest competitor of crypto and crypto regulations in India right now. And basically, the UPI restrictions that are in place right now prevent people from getting scammed, people from losing money. But that's because UPI is really accessible to all parts of India, and people aren't really required to even give any identification in some apps. So, for example, Paytm has a Paytm wallet feature where you don't need your any identification, and even kids can use it. So, to prevent frauds and scams, we need to have some regulation on UPI because it's so accessible. But when you talk about crypto has a high barrier of entry for a normal consumer to really start investing. And as a result, the consumer is actually required to do his research, which prevents him from getting scammed and falling for like petty scams. When it comes to more dedicated and more elaborate scams, that's where the administration of the private crypto marketplaces takes place, because since the trade is going on their platform, they are technically accountable for any fraud or scam that happens, and therefore they have to take action between when a major fraud happens. So that's why I'd say that crypto does not require any regulation whereas UPI does.
All right. Does anyone else want to talk about this? Okay. Thank you for your inputs. Um, we have another question. So, would it therefore mean that I create a crypto with hardly any investment, and then people pay me millions of dollars to use the currency? Wouldn't it give power to simply just print money then?
I don't think so. Wouldn't give power to print money then. I think with crypto, there is a fixed amount of transaction that can be done. Like, not fixed amount of transaction. I mean, there's a fixed amount of money that is there. If you're talking about fiat money can be printed more, or the money supply can be influenced by the government. But with something like a Bitcoin or an Ethereum, money supply cannot be easily influenced.
All right.
I'd like to answer this question. So, if you launch your own crypto coin, it's not going to rise as fast in popularity as you see some of the famous coins doing. One example of this is Dogecoin. Dogecoin was created as a joke after a meme, and it only rose because some famous people and rich people like Elon Musk promoted it on Twitter and basically manipulated the entire market. If you were to create a coin, and you hold enough power to manipulate and influence people into buying that coin, that would definitely mean that it would rise in popularity. But for most people, that case simply isn't true. If you make a coin, you have to gain the people's trust, and you have to prove why it's a good coin to invest in. Um, or, already set up coins like Bitcoin, Ethereum, Solana have not benefits. So they have the major trust of the majority of the crypto community, and that's why major transactions are taking place through that mean. If you just make a coin, say IND coin, people may invest in that coin, but it won't have the same level of trust as Bitcoin, Ethereum, and the ones I mentioned for a few years. And you have to make sure that your currency is stable, it doesn't crash on the blockchain, and you have to make sure you have fair gas fees, as you mentioned, for it to gain the trust of the people and actually start to accumulate more and more investors.
Also,
It's not an overnight thing that could give you a lot of profit just by making a coin.
one of the reasons that the government isn't basically considering crypto as a fiat currency at this point of time, because is because of the fact of faith, right? They still are iffy and do not trust cryptocurrencies and how volatile they are. So I think that could be another point to add in this.
Yes, I totally agree with that. The volatility of your crypto would also be very high at the start, which would lead to
Right.
less people investing as a result.
I mean, trust is a main factor of people who are not investing in crypto at this point of time. They do not, I mean, they do not know about it. That's one thing. But some people are not able to trust in the effectiveness or in how much returns. And basically, they have a fear of losing their money because they do not trust it.
Okay, there is another question, which is why should anyone use crypto in India when we have UPI, which is faster, it's cheaper, and it has negligible impact on the environment?
So my argument between UPI and crypto, 100% stands for every other country, every other major country like US, North America, Europe, etc. Because they don't have the technology of UPI. But in India, you're right. UPI is great. It's instant. It has zero fees, negligible impact on the environment. But since there are so many different apps for UPI transactions, Paytm, Google Pay, Phone Pay, it may provide a barrier to some people, and they might not be able to transfer money. For example, if you try to transfer money through Google Pay, you can you can definitely transfer it to any UPI ID. But if you want to transfer it to a number, that number also has to have Google Pay installed and has to be registered in Google Pay. I can't be a Paytm user and then transfer money to a Google Pay user. And this is also true for my personal case. So since I'm not 18 yet, I can't actually use Google Pay or Paytm. I use this app called FamPay. It's a UPI app that's specifically made for teens, and as a result, I cannot transfer money to anyone who's not on FamPay if I don't have that UPI ID or QR code. And some UPI apps also have a limit on transfer for each transfer. So, for example, FamPay's limit is 50,000. Paytm has a limit of around 75,000 per transaction, whereas crypto is I don't think it has any limits. Also, if you want to transfer money between from an Indian to another Indian, both of them have to be registered on UPI, of course. That's the same case with crypto, but it can only be done within our country and maybe some other countries like Dubai. Dubai is also working on their UPI infrastructure. But whereas crypto, as I said, it's universal. It can be transferred from any country to another country. And sure, there are some gas fees, but if you are using a well set up crypto like Ethereum, there's almost there's little chance of okay, I'd like to take that statement back. So if you're using Ethereum to transfer money from, say, India to Nepal, you can definitely do that, but you can't do the same with UPI. Or you're transferring from India to Australia, you can't do that with UPI. And as I mentioned, the limits and the glitches that exist in the UPI system as of today, you can send money to a vendor, it will fail for you, and the vendor will receive it, and then you won't get a refund. And the vendor does not receive it. You won't get a refund because from your side it's been sent, and the bank has some problem in their system, or maybe it's as I said, different apps, so their API doesn't work well together. So all in all, UPI is more reliable for smaller payments that are occurring over small distances, but for the big payments that are occurring over all around the globe, crypto proves to be a better solution.
um, um, it's factually true that almost every household has two people using UPI in their household. So like, what is the why are they not using crypto? Is again, I think, faith, right? If other people would like to discuss on this.
Are there any other inputs from anyone else?
I'd just like to add one thing. I think that's definitely true. UPI has a lot of faith in India since it has
Yeah.
been gaining a lot of traction since like 2017. But who's to say that crypto cannot get the same faith in, say, 5 years? We don't know what the crypto market holds for India. And since there are no regulations in place, crypto is crypto provides a lot of flexibility when compared to UPI for any potential users. But I do agree with the point that there is less faith in the crypto market of the Indian population when compared to UPI. So UPI does win in that regard.
But like, what is the reason behind that? Is it because of the ease of using UPI in India at this point of time?
I'd say it's a mix of the stigma surrounding crypto due to all the scams
Mm-hmm.
and basically the volatility of each coin and the amount of research and knowledge required to invest in each coin. Whereas UPI is just a simple money transferring system that, as I said, can be used by anyone. So that's the major difference between crypto and UPI, and that's why I think UPI has much more faith in India compared to crypto.
Okay. All right. I just had one question.
And UPI is also like backed by the government, and crypto isn't. So,
Hmm.
Okay, that's it, I think. Yeah. So, thank you all for all your input. We had some very valid points. We had good discussions. Um, yeah, just thank you, and I think we will conclude this SIG now.
right.
All right. Thank you everyone once again for your inputs to all the participants, and thank you to Manan for ensuring that we could have a fruitful discussion today. Um, we'll now quickly take a 5 minute break to process all the discussion which has happened today, and then move on to the conclusion for the first Student Internet Governance Forum SIGF conference. We'll have a concluding note from Dr. Mrityunjay Sharma, one of our judges, after this 5 minute break. Thank you. All right. We hope that you were able to recollect the intense discussion we have had today. We'll now like to thank all the fellows, especially for ensuring that our participants were able to adequately address the questions put to them. Internet, digital, and technology policy is a topic which most of us aren't necessarily familiar with. It's unfortunately not explored in a traditional school curriculum or in education. But again, thanks to the fellows for ensuring that they were able to explore these ideas with the participants. Without further ado, I'll now invite Dr. Mrityunjay Sharma to offer his thoughts and a concluding note for the event. After that, we'll have results and recognitions.
Right. Well, thank you, Kavish, for giving me a chance to be a part of the conference. First of all, congratulations to every single one of either the team members or the fellows or the participants, especially the participants for so graciously discuss such burgeoning matters, right? Things that are really important for your generation and for the coming generation as well. So yeah, well done on that. And I mean, it takes a lot of courage to come out and discuss such topics, and then with such intellectual prowess. So best of luck to all of you, and three cheers to all of you actually. And yeah, good luck and thank you again.
So, without further ado, I'll announce the results. Once again, thank you very much to Dr. Bhattacharya as well as Dr. Mrityunjay Sharma for compiling the results with great precision and ensuring that they were impartial. Um, so, without further ado, the absolute best SIG, which is a composite average of the participants, was the second SIG, um, technology with respect to cryptocurrencies and digital currencies. Within that, Harsh Ahuja was the winner. He was the best debater and the best discussion. He led the best discussion. Apologies for that. And Twarit was the runner-up. Our second best, or the runner-up SIG, was the first SIG, Ethics of AI. Within that, Hasini Bhattacharya was the most impressive participant, and the runner-up was Ishan Kalia. We'd also like to give honorable mentions to the other two SIGs, the regulation for cryptocurrencies SIG, in which the best participant was Arnav Pandey, and runner-up in that SIG was Mishti Goyal. So once again, congratulations to those two. Also, I'd like to give special mentions to Pratham Tulsian and Manan Shah from that SIG. And lastly, an honorable mention to the Privacy Policy and Data Protection SIG. Anirudh was the best performer in that SIG, and the runner-up was Arav. So thank you all for your contributions. If Dr. Bhattacharya could come up upon stage and uh, explain his experience with the event, that would be greatly appreciated. Thank you.
I think this was an absolutely brilliant discussion. It was beyond my expectation for the level of maturity of thoughts that each of the speakers brought in. I did not expect that at this level of high school, the children will be able to bring in, or the participants, I would rather say, would be able to bring in this depth of insight and knowledge and be able to handle the very complex questions that were posed by the audiences and the delegates to this particular conference. It's been a truly amazing experience. I would also like to call out Kavish Garg for providing leadership in putting together the first Student Internet Governance Forum, which is a global forum, which Kavish and his subsequent people will be taking forward and spreading it around the world. I am looking forward to the next SIGF conference, which I'm assuming will be at a much more global scale. And all the best to Kavish, his team, and all the participants, panelists, moderators. It's been a fantastic job, and keep up your knowledge in this very, very complex and ever-changing field of digital policy.
For your enlightening and kind words. Lastly, we'd like to thank the India Internet Governance Forum for providing aid in organizing this event, as well as offering their valuable affiliation to the opportunity for SIGF to affiliate with IIGF. And we express an immense gratitude to them for the same. And with that, we come to the conclusion of the conference. Hope you've enjoyed our discussion and have gained something or some knowledge that you bring forward in your lives. We'd also urge the participants, if you're a student of school, if you're in school, please sign up for the next conference and be on the stage discussing similar issues, if not even more pertinent ones. Thank you.